Hello everyone, welcome back to the channel. Matt with Green Bar Trading here, currently sitting up over $1,200 in profit, trading Disney to the short side, fading Disney, trading XLE to the short side. What did I see? Why did I take puts? I'm going to get into that all in just a second. On Disney, today we posted, I'm fading Disney with puts. That was at 10 a.m. On the XLE trade, this was from Friday. A lot of puts being gobbled up, I wrote. This was at 3:13, so about 45 minutes before the close. I was waiting for my order to get filled, to go short. It didn't get filled at that time, and then it got filled. Right here just got filled. That was at 3:21, and somebody asked me what strike I put. The in the money 92 puts, had 3 weeks on this trade. 3 weeks. It ended up working right away. So let's get into the charts and why I was really liking these both to the short side. So let's look at this. This is Disney. All right, so what happened with Disney? The reason why it was gapping so much on the day, just take a look right here. The reason why it gapped up so much from 91 close to over $100 a share was because they fired their CEO. All right, that was the only reason why this was up. Now look at how much this has to fall if it decides to come on back. This is a fade play, right? During these plays, you get in, you'll get some bounces, and most of the time a fade will look like this, making a series of lower highs and lower lows. So that's exactly what played out really well with Disney, just up because they fired their CEO. I personally did not think that garnered an 8-9% move on the stock. So, you know, even though it's up still over $5 a share, up still 5.5%, that's still up a lot. So the news is still in the stock. That's fine. I have no problems with that. I wasn't looking for this to go all the way to 92. Especially not in one day. So I was just looking to take advantage of a fade. That's it. So that's what happened with Disney. And the reason why I really liked it is because it was gapping up right into resistance. Take a look at this chart. This is the daily chart. It was support here, this 100 to 101 area. It was support, broke down, retested it, sold off, got above it, tested it, went higher. You can see very clear as day that this was a very clear level. Came up, rejected, broke through it, consolidated just under it each day. Each day could not break out. Sold off on the earnings, and then has been, trying to dig its way out. Now, gapping up all the way to this, to the penny. I love a fade play like that. Something that's gapping up to previous resistance. Look at that nice big sell-off. That's a great fade candle right there. So that's why I got in short on Disney puts. And the next trade was the XLE. Now this one, when I show you guys the intraday chart, you're not even going to believe it. And it's why I like to take profits. You can see here this bullish hammer that's starting to form now on the daily chart. And I'm also going to show you guys why and where I got out, because I think that's really important. When a move happens in your favor immediately, even if you have 3 weeks till expiration, you're basically hanging on to all that premium. because the move happened immediately. Now, you could still have held this, right? If you had a price target, let's say I think this is going to go back down to the bottom trend line, which I personally do. I just don't know how long that might take. That might take a year. Who knows? But, you know, getting that first move was really important. But why did I short it? If you look here, you have previous resistance, right? We tried to break out of that and could not do it. That is not very bullish. Now, I said this on my weekly watch list video, showed this on my weekly watch list video. We have a head and shoulders pattern here on the weekly chart. You have your shoulder, you have the head, and the other shoulder that just so happens to be a double top on the year right here. So really liked this for the short side. I actually still like this, but like I said, time frame, right? If you have a few years, you know, then maybe it can definitely come back down and complete this head and shoulders pattern, which would take a really big recession, I think. That's also why I like this one to the short side. I do think a recession is in the future for it. So, you know, if we just take a look last week, this is also something I posted on yesterday or the day before his weekly watch list video. Energy started to become an underperformer. We've seen energy at the top of every list. 3 month, right? 1 year, up 45. Year to date, up 42. Energy has been the clear outperformer. Now, what's starting to happen here is oil is starting to lose its steam, right? So oil price per barrel for the last week has had one of the biggest drops in a long time, down just about 10%. So, you know, with that drop and the technicals in the daily chart, that really put together my whole trade thesis, followed through with it. Now I'm going to show you on the intraday why I take my profits. So this is what was going on in the pre-market, selling off. It opens up, it sells off, and this is where I start to take my profits off. Now, it did continue to go down lower, so I left a little money on the table. That's totally fine. But look what happens here. Right at 12 o'clock, something comes out from OPEC, from the Saudis, that a Wall Street Journal article that said that they were going to be increasing production, you know, was totally false. That's what the Saudis came out and said. So if you're going to increase production, okay, that's going to make the price of oil come on down. That's why our government, other governments around the world, have wanted OPEC to increase production. You have more supply, and then that makes the price of oil per barrel go down. Now, they want the price per barrel to be high. So, you know, coming out and saying this, we're not going to be increasing production and maybe even decreasing production. That's going to limit the supply, and that's going to make the price per barrel go up. The price per barrel goes up, all the energy stocks will do well. So that's what this bounce is right here on XLE. Now, it could just be a short-lived bounce, but this would have taken all my profits. So instead of being up here $872 on the 5 contracts I had, I would probably be even. I don't even know what, I might be up a little bit, but I would have given back all those gains. So that's why I like to lock in profits. Now, you know, Disney, that's another one. I still think there's room to go. I'm going to monitor that one as, you know, the day progresses. But, you know, so far, not a bad day at all. Still sitting up just about over $1,000, a little over $1,100 on the day. All right, guys. So hope that you enjoyed this video. Hit the thumbs up for me. And if you're new, consider subscribing to the channel. Go over, visit our Discord. It's a great group. A lot of helpful traders in there. And yeah, that's it. I'll see you guys back on the next one. Take care, guys.